Good morning, everyone, and welcome to the Quantum Leap morning market session for Wednesday, March the 19th, 2014. Happy Fed Day to everybody. For those that are visiting us from Twitter or watching this on YouTube, we are Quantum Leap. We are a self-organized learning environment. My name is Doug McKay. I am the founder and moderator of Quantum Leap. We have a private Skype room that has been around for over 4 years now, and we come together each day in the Skype room to talk about the market, talk about our trades, our observations, and then each morning we come together with this live to go through our morning market routine to get ourselves prepared for trading, go through our macro to the micro view, and then do our chart analysis and set up our levels and our targets for the day. If you are watching this on YouTube, you might want to skip ahead. We do go through a routine that starts with the key numbers, then we look at the basic trends before we get into some in-depth analysis. And that's simply because we're preparing ourselves for trading, and obviously if you're watching this on the video, it's after the fact. You want to get into where our levels are and why our levels are. But if you're interested in finding out more about us, you can give me a email to d.mckay@stealthtrader.com, and love to talk about the market. Love to find new traders that have like-minded trading styles. Anyway, let's get the legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading features or any instrument involves risk loss. Please consider carefully whether features or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within the self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own trade plan. Whew. Man, I could say that in my sleep, I think, now. All right, so let's start with the key numbers. Obviously, we've got Fed Day, so we've got new stimuli that is going to come into this marketplace, possibly revalue the market perception, and we could get a move off of the Fed. We could fizzle. You never know. But we got to look at the numbers and see where we are. So obviously, our open of the year, 1837.75. Our year high right now is 1887.50. That's been adjusted to the June contract down to 1880.50. And then our year low is way below us down at 1732. There's really not a lot in the macro to look at today. Let's just go jump right into yesterday. Yesterday we opened the Globex at 51.75. We had a high of 59.50, a low of 45.50, and we opened in range, just barely in range, at 1854.75. So we opened in range, but we didn't open in value. And that's where we were saying that if we held outside of value, look for the breakout to go take out the overnight high and a move up to that 64.50. And it was a beautiful move. And once we got up to the 64.50, we went sideways and just rotated around it. OTF stepped out. The market had a 3-point harmonic rotation around that previous microcomposite VPOC, and we'll talk about that. But you can see that all our Globex numbers were higher going into the day yesterday. We had an open auction in range. We broke the IB to the upside for a normal variation day. Opening swing, 55.50 to the high side, 52.75 to the low side. The opening swing was our daily low. So our opening swing and our initial balance was the RTH low at 52.75. And then we had a IB high of 64.50, which was our target, our main target above. And again, we're seeing this expansion in the initial balance as we're, what I consider to be probably this blow-off top. I think it's coming now. And that's my own personal opinion. And again, another day of intraday RTH numbers that were higher 1230 number at the former microcomposite VPOC, higher high 67, higher low at 52.75, a higher close at 63.75, and the VPOC shifted up again at 64.50, and our range was 14.25. You can see we've been getting a fairly decent range. Going over to the 20-day ATRs, you can see they continue to expand out. We're almost up to a just over a 19 point range for the full session, and just under 15 3/4 on the RTH, and just under 11 on the Globex. Value area high, and the value area low were higher at 66 and 61. And we broke the IB. We had a make and break on the IB at 9:31 Central Time. Higher extended hour trading, and we had higher than volume. So there, if you look at, and just let's take a quick look at it, because this is something that I'm noticing, and we're getting all these P-shaped profiles. You got a P-shape yesterday, P-shape here. There's a P-shape here. We're getting a lot of P-shapes, and that's short covering, and I think we're going to get a bit of a blow off top, but I think that we're going to roll over here pretty soon, and I may be wrong, but certainly feeling that way. But let's keep going with our numbers. Let's take a look at our daily report. We've got so far full session high 67.50, full session low of 61. So our full session ATR target is 1880.38. Well, our adjusted all-time high is 1880.50 put in the Globex. I know that the RTH high is 1877.75, but the all-time high adjusted to the June contract is 1880.50. And you all know how I feel about when we get a differential in the highs between one contract and the next contract, because our real all-time high is that 1887.75, or 1887. Geez, I can't even remember my own numbers. 1887.50. So you know that I feel that they usually like to go and equalize those two highs. Of course, the big news today is we've got Fed statement, not just the Fed statement, we've also got the press conference. So there's really going to be a lot of risk right from 1 o'clock Central through till whenever Yellen gets done yelling. I'm going to coin that phrase. She's yelling. Anyway, she's going to be talking, so you've really got to worry about risk of any statement that she makes. So it's not just when the Fed comes out, but it's right through until the end of her press conference, and the market has a chance to digest what she has put out. And the really big thing will be, are they going to continue the QE, or are they going to continue tapering? Of course, always want to, one of the reasons why I think we're looking at a blow off top is this is the Commitment of Traders report, and you can see that the net zero line, the large specs and the commercials are net negative, so they're net short, and we continue to chase this top as small specs and retailers and possibly be bag holders. I won't be a bag holder, I know that, but there is a possibility that the retail traders are going to be left holding the bag. So let's take a look at the macro to the micro really quick. I want to go through everything really quick today. Trend on the monthly, very strong, trading in the upper distribution, coming up, trying to get above last month's high at 66.50. We're just trading around there. We did get above it overnight. Good slope and separation on the 9 EMA and the 20 SMA. Trend on the monthly is very strong. On the weekly, we've got this possible head and shoulders pattern, showing up. Don't know if it's going to form, but the key is we still have slope and separation, and we're trading above the 9 and the 20. The trend is very much intact on the weekly. Of course, we did have a little bit of weakness coming in on the daily. On Thursday and Friday, we broke below the 9 and the 20, but in the last 2 days, we've broken back above the 9 and the 20, and we're starting to get slope. We don't have separation yet, but there's no real trend right now, but we've halted what was the start of a downtrend. And taking a look at the geometric chart, I took, as I said, mentioned yesterday, I was going to take out that intermediate fork that we put in a couple weeks ago. I've got 3 forks on my chart here. There's the long-term fork, this one right here, with the center line right here. We've been following that for probably half a year or more, and we've been tracking the lower channel of that really nicely. Then we broke below it. I added the downward opposing fork and this intermediate fork, and right now we had that energy point that was based on that other fork that I just took off, and we hit it right on Q, right on T, and then we broke back inside of the longer term fork and went up and tested the center line of the intermediate upward sloping fork, and now have broken back above that. And so far we're holding above the center line. So the thing you want to look for is a continuation and a move up to come up and test this upper line of the opposing downward sloping fork, and look where that is, 1879.75 area, or I would think 1880 area, and that adjusted all-time high. But if we come down and test the center line of the smaller intermediate upward sloping fork, that'll bring us back down to that 1859.75 or that 1860 area that I want to talk about when we get to the composite. And then if we break below that, come down and test the lower line of the longer term fork, will bring us down into that 1845 area. We've got these energy points here, so all 3 of them can still come into play right now. We've got this one right here, which is the intermediate one that is showing that it's due to come in next week on the 24th. And that would still give us time to have a blow off top and then a big plunge down into this. I'm thinking that the likelihood, if we do get a move up to test this upper fork, I think the likelihood of this lessens, but it's still something that we've got to pay attention to. And then of course I've got to take a look at a smaller fork coming in, so I'll do some work overnight to see on the smaller time frames if there's any energy points that come in from a smaller time frame fork. But let's go and take a look at where we are in the intraday trend so far. Coming into the RTH, you can see we've got slope and separation on the 4-hour. We got a bit of a technical gap on the 4-hour, and we're kind of just going sideways, so we're likely to come down and close this this technical gap to the 9 EMA. I think you're probably going to see it somewhere in around 1861 area, and we'll look at that, what that looks like on the composite. But we do have a bit of a trend going on the 4-hour. On the 30-minute, still going sideways on that 30-minute with a little bit of an upward bias. We seem to be holding this 9 EMA now. We're starting to get some separation. We're starting to get a little bit of slope. We've just come down and tested the 9 EMA. So the 30-minute looks a little bit more positive. Let's take a look at the 5-minute. 5-minute doesn't give us crap. It's just chopping all over the place. So there's no real strong trend coming into the RTH, which is pretty likely, because I think it's going to be a bumpy open, and we're just going to get some sideways action. So let's take a quick look at what happened yesterday. We talked about the holding above the value area, and if we held above the value area to get long on the breakout of the 55.75, with the first move to take out the overnight high at 57, and the move up to our first target, which was at 60.50, and then with the extended target or our main target above at 64.50. It was a beautiful move. Once we had that, then basically there was a couple really nice VWAP to VPOC trades that you could have taken, and then we just sort of rotated around. You can see OTF basically stepped out of of the picture, and we had a 3-point harmonic rotation above and below the the most accepted price or the volume point of control. So the move was in the morning, and then you basically could have gone away and did something else in the afternoon. Let's see where we are in the big picture. So right now I've added, because we rotated all the way in, I've added all the last 5 days into this profile, and the most accepted price or the microcomposite VPOC for the last 5 days is this 1851. Is it 51 or hard to see if it's 51 or 50? It's 5075. And I looked at what it looked like by adding all of the days in, but it didn't give me any information. If I expand this out and bring in all these days, you know, the most accepted price right now is this 1864.50 area. So no information, as you know. If it doesn't give me, didn't want to do that. I'll take care of that in a minute. If it doesn't give me new information, I don't bother with it. Okay? I want to know what information is going to give me an edge to trade. And, you know, it tells me right now by adding these 5 days that they came down, they came all the way down like we were expecting it, down to this 1830, this 3450, the microcomposite VPOC from this balance area from February the 14th through to March the 3rd. We picked up buyers here, and then we came up, we accepted value around 1850.75, and then we went back up and we searched for sellers up here at 1864.50 in right around where our prior microcomposite was. Very clean, very nice. The market is giving us some great levels right now, and currently right now we're trading around this distribution point and the microcomposite VPOC of 1864.50. So take a look at the overall value area high is 1873.50. Value area low is 1855.75. So you want to be watching this 55.25 CLVN and the 71 CLVN. You know, inside of this area, we're likely just to chop around going into the Fed, you know, in between this, this 1860 area and this 1871. But if we break above 71, then we're going to go into price discovery. They're going to come up and try to test the upper balance of the value area at 73.50, and if we break out of there, look for them to go and test that 77.75 RTH high. But the the target that I've got above is the ATR target and the all-time adjusted high at 1880.50. If they get below 55, then we're breaking outside of the value that we're back into, and I'd be looking for a rotation back down into this 50.75. I don't think 52 is going to hold now. We've been through it a couple times now, and with this microcomposite VPOC at 50.75, they're likely going to have to come down here before they find the first buyers. You might see, you know, some resistance here at this 55.25 and 56, because that's the value area. You know, that's the value area. Why do I have? Yeah. Why do I? That's the value area low of this prior microcomposite right here. And then if they get down inside of this this 55.25 and start trading in around this 50.75, look for them to push through down to 46. You can see that there's a microcomposite LVN, there's a CLVN, but the big number I'm watching again is that 43. There's that 43 again, because that 43.75 is the value area low of the 5-day microcomposite and the value area high at 43.50 of the area that we broke out of. And you can see, you can see how these levels start to play, play against each other. And if we get below that 43.75, we're getting back inside of the prior balance area that we just came down and picked up buyers at 34.75, and they're likely to come down and and test this area again. But as I'm saying, once you go to the well, too many times, the inventory is going to dry up there, and the conviction of the buyers is going to be less, and we're likely going to come down and come back down into this distribution area with the former microcomposite over here at 25.50. with a test of the other side of balance all the way down now. I think it's really going to be down here at this 1808.50 because we've got that naked microcomposite VPOC still there here at this 1807.50. And we haven't been down here yet to try to pick up buyers yet. So if they get below this 43, look for the rotation into this area here. And then if they can't hold this 21, the big destination for me is down here at this 1807.50, probably pushing all the way through to test the 1800 level again. Whether that happens, today, I doubt it. But it's, we've got to start, setting what the probable rotations are based on where former balance is. So let's go take a look at what happened overnight, move our chart levels over, and start setting up our chart for the day. So we've got an overnight high of 67.25. Is it 67.25? I'm sorry, 67.50. And that's, basically 2 ticks above the prior day RTH high. And then our overnight low is 61. Which is basically right at the value area low from yesterday. And current VPOC is right in at 65.25, which is just slightly above our VPOC from yesterday. All right, so here we have the P-shaped profile from yesterday. We're trading in the upper distribution, and we're sitting right on top of the value area from yesterday. So we are going to open up probably, we still have 20 minutes to go. We're either going to open up inside a range and inside of value, or we're going to open up inside of range and outside of value, or if we get a push prior to the open, we're going to open up slightly outside of range and outside of value. So there's a couple different scenarios that we have to look for. Let me get rid of this, expand this. So this is going to be a defining line for me today. 66 is going to be a trade area because inside of value, inside of range, I'll look for them to come down and take out the naked VPOC from test the overnight VPOC at 65.25, take out the naked VPOC from yesterday, and take out the naked close, which is at 63.75. And with a probable push down to test and do an 80% rule on the value area and come down and test the value area low and take out the overnight low. So this is going to be my main target below, is just right here in front of the value area and the overnight low, with this 1860.50 area being a possible area that they'll step in to to hold us and try to bring us back into value. So this 1860 area, 1860, 1865 is going to be a trade area. If we get below that 1860.50, I'm looking for a rotation down to test the value area low at 56 and the CLVN at 55.75. So that will be a target and a trade area down here at the 56 to 55.25. Actually, just bring it down slightly. And we've got the open from yesterday just below it at 54. Below that, okay, I'm looking for a move back down to this 50.75 as I was just talking about in the bigger picture. We've got it as our current microcomposite VPOC, and it is a naked VPOC, and we've got a naked close right here. So this is my main target below. All right. Now, if we get above this value area, look for them to take out the overnight high and try to break out of the overnight or the RTH range high. So I will get long into this breakout of the value and the takeout of the overnight high, and a possibility push to break out of the RTH range. And the first target above is going to be this 1869.75. And remember that flagpole formation still hasn't been violated, and remember the measured move was that 1869.75. And then above that, I'm looking for a test of the 73.50. That will be an area that I'll be looking for responsive sellers to step in at the value area high. And then if we break above that, the target above is obviously the 77.75 RTH all-time high adjusted with the 80 and the 1880.50, I can say that, is a target and a trade area, because I'll be looking for them to probably step in and try to hold that. But if we break above that, then we've got those two targets above at that 1887.75 and 1886.75, which were the two. That was the RTH all-time high before the adjustment, and the extended target in the all-time high at 1887. That should be 1887.50, shouldn't it? Got moved slightly. All right, so that's what I'm looking at. Those are the areas that I'll be looking to trade. Let's take a quick look at how that looks going into the open on the Renko with Keltner. We're currently trading below the center line, which is at 62. That's not right. Sorry. We're currently trading above the Keltner center line at 63.75, and a test of the upper Keltner looky 69.75, which is what our first target is above. And then look for a possible walk the line setup up into that 73.50 if it happens. A break below the Keltner center line takes us down into that 1858 area. And we had a CHVN in it, that 1858, but it's not as pronounced. There is a CHVN right there at 1858 that we were looking at, but I don't think it's, I think the key number below is that 55.75. But you might see some buyers stepping in here at this 58. But I think they'll be minor. I think it'll be just a small little rotation. So quickly taking a look at gold. We're getting some weakness coming into gold. We do have this, finally getting a bit of a handle on this this cup and handle formation. And if it comes down, we've broken below the 9 EMA. We're testing the 20 SMA right now on the daily. If we break below that 20 SMA, the target below is that 1311 area. Or more specifically, I'm watching is the 1350 area, and that will validate our cup and handle, and then it could still come all the way down into the 1261 and still not violate the pattern. And then again, if we get, if we do come down and get the retracement and get the move up, we've got a measured move. Why is my measured move not in there? Our measured move is up in the 1500s. Come on. What is it? 15. Oh, I'm sorry. It's adjusted higher to 1600. Wow. But again, we've got a big move down still to possibly see. If we get below that 1300, sell, sell, sell until your fingers bleed, because we're likely coming down to the 1261 area, 1268. Definitely. Let me just bring up the composite for gold, and we'll take a quick look at it. So we're broken out of this value we're trying to hold in around the 78, 79 area. We're below the 52, the target below, the main target, and where I think we'll probably get a rotation down to see if they can find buyers again is down here at this 34. You've got 34, and you've got the other side of that balance right there at the 21 and the micro composite VPOC from the stair step up at 1320.50 area with the 1350 right below it, and then the other side of the balance is down there, well, between 1304, but I think it's really that 1300. And then below the 1300, you got some beautiful targets down here. You've got this 1298 to get scaled. You've got 1282, the 1275, and then the 1251, 1261 area, which is as far as we can come down to still be part of this the handle of the larger cup and handle pattern that's possibly setting up. So that's what I've got. Howard, over to you. I know I'm not leaving you much time these days, am I? Maybe I got to get you going first.
All right, so we'll take a quick peek at the daily chart. And so after we had this bit of a correction, we came down, we tested the 50 SMA as I mentioned yesterday, and this happened on the 17th. And upon testing the 50 SMA, we had a key reversal daily candle. We've had a few of these at tops, the key reversal candles, but they have not lasted long. But we've had also a couple as we've had some dips, and that brought in a lot of strong buying. So we had this day, we had continuation yesterday, and so far today we're still up on the day. Yesterday we broke above both the 20 and the 9 moving averages. The key reversal candle tested both. Broke through yesterday, and today so far we have not even come down to test the 9. So it's looking strong. As Doug was mentioning earlier, this could portend a move to challenge the all-time high, maybe give us that blow-off top to leave all the retail traders holding the bag as shown in this COT report. But this is looking like a strong move. The 50 SMA provided very strong support. Let's see what we see on the weekly. So on the weekly, last week we came down and pretty much closed right on the 9 EMA. Tried to probe below, but have strong rejection going so far this week. With the Fed coming up today, as Doug mentioned earlier, that's going to add stimuli to the economy. So it's going to be an important indicator today as to whether we continue this move higher and to go look to take out the high, or whether this was simply a strong retracement of this move down last week. Last week we had a bearish engulfing candle, but a lot of these bearish candle patterns have not lasted long on this rally the last couple of years. So if the pattern continues, then this will just be a little blip on the radar. We'll continue higher. If the news is not so good out of the Fed, could very easily come back and challenge the low of last week and these moving averages. So looking at our market breadth, so as of yesterday, breadth actually weakened a little bit. Advanced decline here in the up volume versus down volume actually weakened a little bit. And these are on a 10-day average basis. So even though price was higher, we didn't get follow through with the advanced decline and up volume versus down volume here, but we did move higher on balance volume. So these indicators still give a mixed picture. On balance volume has been in sync with price, but overall market breadth in terms of up volume versus down volume and advances versus declines have not. They actually peaked up here around February 18th to February 20th. So next we'll look at the sectors. And utilities, which has shown the most strength and overtook the top spot, actually kind of flattened out and turned just down slightly yesterday. But all the other sectors are in sync and moving higher. So just a very slight bit of divergence, but not much. So I'll just go to my daily chart one more time and kind of review my Elliott wave count from a while back. So I guess starting from here, I went back too far. Starting from here, I was looking after this correction, and from there I see a possible 5-wave pattern that may or may not be completed. So we had a 1, a 2 retracement, a wave 3, a wave 4 retracement, and then a 5th wave, but it's possible this 5th wave is not yet complete. I did have a 5th target up here at 1886. We exceeded it by 1.5 points, and that's where we got this retracement. So, time will tell, and today will be a big part of that picture, whether we're going to continue on this 5th wave or not. So that's what I'm looking at. And I'll turn it back over to you, Doug.
Thanks, Howard. So nothing really changing in terms of going into the open. We're going to be opening, it looks like we're going to open up inside of range and inside of value. So look for them to take out the naked close and naked VPOC. But if they break above the value area high at 66, get long into the overnight high. Make sure you get scaled before the overnight high and the breakout of the RTH range somewhere between 67 and 67.50. You want to get scaled out, and then with that, if you've got runners, let one run to 69. Same thing. If they can't get above the value area high, get short into 64 and 63. The 63.75, where they push through down to take out that overnight low at 61 and possibly test that 60 area. If they break 60, let one run and see some weakness coming in and test the other side of balance down here at 55.25. As always, trade well, trade safe, and we will catch you on the flip side.